Welcome viewers, we're thrilled to have you join us today. Today we're diving into the fascinating world of accounting. Accounting is often seen as the language of business, and for good reason. It provides a systematic way of recording, analyzing, and interpreting financial information. Our topic is understanding the accounting cycle. This cycle is a series of steps that companies follow to track and manage their financial transactions. It ensures that all financial data is accurately recorded and reported. Why is the accounting cycle important? Well, it plays a crucial role in maintaining the integrity of financial information. Without a proper accounting cycle, businesses would struggle to keep track of their financial health. It's the backbone of financial management, providing a clear picture of a company's financial status. This information is vital for making informed business decisions, planning for the future, and ensuring compliance with financial regulations, helping businesses track their financial transactions accurately. By following the accounting cycle, companies can ensure that their financial statements are reliable and complete. This in turn builds trust with investors, creditors, and other stakeholders. The accounting cycle typically includes steps such as identifying transactions, recording journal entries, posting to the ledger, preparing trial balances, making adjusting entries, and finally, preparing financial statements. Each step is essential in creating a comprehensive financial picture. By the end of this video, you'll have a deeper understanding of how the accounting cycle works and why it's indispensable for any business. So, let's get started and explore each step in detail. Step 1. Identify transactions. Every financial event like sales or purchases needs to be identified. For example, when a company sells a product, that's a transaction. This step ensures that all financial activities are captured. Step 2. Record and journal. This step is crucial in maintaining accurate financial records for any business or personal finances. By documenting each transaction meticulously, you ensure that every financial activity is accounted for and can be referenced in the future. Here, transactions are recorded in chronological order. This means that each entry is logged as it occurs, providing a clear timeline of financial activities. This chronological order helps in tracking the flow of money and identifying any discrepancies that may arise. We use debits and credits to keep the balance. Debits and credits are fundamental concepts in accounting that help in maintaining the integrity of financial records. A debit entry increases asset or expense accounts, while a credit entry increases liability, revenue, or equity accounts. This dual entry system ensures that the accounting equation, assets equal liabilities plus equity, always remains balanced. For instance, a sale would be recorded as a debit to cash and a credit to sales revenue. This means that when a sale is made, the cash account is increased by the amount of the sale, reflecting the incoming money. Simultaneously, the sales revenue account is credited, indicating an increase in revenue. This method not only keeps the records accurate but also provides a clear picture of the financial health of the business. Step 3. Posting to ledger. This step involves transferring journal entries to the ledger, where transactions are organized by account. It helps in summarizing all financial data in one place. Step 4. Preparing a trial balance. This is where we check for errors by ensuring that total debits equal total credits. A balanced trial balance indicates that the books are accurate. Step 5. Adjusting entries. Sometimes we need to make adjustments to correct financials, like accruing expenses or deferring revenues. This step ensures that the financial statements reflect the true financial position. Step 6. Creating financial statements. We prepare the income statement, balance sheet, and other reports to summarize the financial performance. These statements are crucial for decision-making. Step 7. Closing entries. Finally, we wrap up the cycle by closing temporary accounts and transferring their balances to permanent accounts. This prepares the books for the next accounting period. Let's quickly recap the steps. Identify transactions, record in journal, post to ledger, prepare a trial balance, adjusting entries, create financial statements, and closing entries. These steps form the backbone of the accounting cycle, ensuring that financial information is accurately recorded and reported. Each step is crucial in maintaining the integrity and transparency of a business's financial health. Identifying transactions involves recognizing and documenting every financial event that affects the company. Recording in the journal means noting these transactions in chronological order. Posting to the ledger involves transferring these journal entries to individual accounts. Preparing a trial balance ensures that debits and credits are balanced. Adjusting entries are made to correct any discrepancies and account for accrued expenses and revenues. Creating financial statements involves compiling the balance sheet, income statement, and cash flow statement, which provide a comprehensive view of the company's financial status. Finally, closing entries are made to reset temporary accounts for the next accounting period. If you found this video helpful, don't forget to like, comment, and share. Your engagement helps us reach more people who can benefit from our content. By sharing, you are contributing to a community of learners and professionals who are passionate about commerce and accounting. We value your feedback and encourage you to leave comments with your thoughts, questions, or suggestions for future topics. Engaging with our content not only supports our channel, but also fosters a collaborative learning environment where everyone can grow and improve their understanding of these essential subjects. And subscribe for more valuable commerce and accounting insights. By subscribing, you ensure that you never miss out on our latest videos, which are designed to provide you with in-depth knowledge and practical tips. Our goal is to make complex accounting concepts accessible and easy to understand, whether you're a student, a professional, or simply someone interested in the field. We cover a wide range of topics from basic principles to advanced techniques, and we are constantly updating our content to reflect the latest industry trends and standards. Thank you for being a part of our community, and we look forward to continuing this journey of learning and growth together. Stay tuned for more exciting content, and remember, your success in accounting starts with a solid foundation of knowledge and practice.